Wharf, London. Today we have a one-of-a-kind webinar where we are fortunate to be joined by the CEO of eToro, Yoni Assia, a Bitcoin enthusiast, and UK popular investor Jay Smith, or Jaynemesis as he is known on the platform and in the community. Jay primarily trades Bitcoin, achieved a 75% return in 2016 and 40% back in 2015. Great to have you on board, gentlemen. Yoni, why don't you do the honors and introduce yourself?
Hi everyone, great to be on this webinar with Jay and Matthew. I'm Yoni Assia, I'm the CEO and founder of eToro. My background is computer sciences as a programmer since I was 13 and a trader myself since I was about 14, so very enthusiastic since very young age about both the markets and technology. That's really the reasoning behind building eToro was really to build a social network where I can find traders from all around the world, share their data, and actually learn about the markets together with them and find talented traders from all around the world. Today eToro is 350 people all around the world. We have 3 of the largest financial institutions in the world as investors in eToro, with offices in the UK, Russia, China, Europe, and Israel. Today our discussion is about Bitcoin. We were early on Bitcoin at eToro. We found Bitcoin in 2011, so very early stages of Bitcoin when it was trading under $5. And actually we're also very lucky to experiment with Bitcoin back in the days when it was under $5 and bought some Bitcoins for eToro and started developing some technology around the Bitcoin blockchain back then. Since then we've been both following up constantly on the Bitcoin and blockchain developments in the world, and have also spun off last year a company called Colu on a technology we've originally developed in eToro called colored coins, which enables the issuance of digital currencies on top of the blockchain. So we're not involved in Bitcoin only as speculators, but we're also quite fascinated around the blockchain technology and have been both researching and developing around the technology ever since. And very excited to see a popular investor here on eToro that has been doing quite well on Bitcoin trading himself. So that's do you want Jay to introduce him?
I also got involved in Bitcoin reasonably early, not quite as early as you guys did. I joined it, I discovered it in 2012, late 2012, and got my first coins back in 2013. I've been trading since around 2010, 2009, somewhere around there. And I actually joined eToro not too long before they added Bitcoin. I actually remember when they added Bitcoin, and I remember buying some simply to test if it actually worked. And I only actually sold those earlier this year. So yeah, no, I've done pretty well on eToro. I love the platform. So that's me.
Cool. So
suppose, gentlemen, sorry, Yoni, go ahead.
No, I was just, I thought maybe I'll start with a quick presentation of what is Bitcoin for here everyone in the webinar, just with a couple of slides. So what is Bitcoin? Bitcoin is basically, people describe it in various ways, but what is really interesting about Bitcoin is not necessarily Bitcoin, the currency or commodity that is being traded, although we'll obviously discuss that as well. It is the underlying technology that runs the Bitcoin currency. And the underlying technology of Bitcoin, which is dubbed or coined the blockchain, is a very disruptive technology to the world of finance. When we started eToro, as a reminder, I'm a computer geek. I was really surprised when we started connecting to various liquidity providers. So we're connected to the largest banks in the world, and when our clients actually trade on eToro, we go and hedge it in the markets. And I was quite surprised about the lack of a uniform API, that when we trade in various liquidity providers and big banks out there, that the technology is not really unified. And whenever you trade as a company, as a financial institution with other partners, then basically you have to constantly reconcile and understand that you have to keep double records yourself on your own database, and they need to run it on their database. And there is a lot of processes going into that, because basically you don't share the same technology infrastructure in between market participants. Now, the basic of Bitcoin blockchain technology is basically a distributed database which people can actually read and write from that database without the need of basically trusting each other, because they can trust the technology. The way it actually works, and hence the name the blockchain, is the history of the entire trades, all of basically the Bitcoin transactions in the world are based on something called blocks. And every time, every roughly 8 minutes, there is a new block which describes all of the changes in all of the transactions in the Bitcoin world into another block, which is then describing basically where is all of the Bitcoins in the world. So it's technology that says that everyone has this database which describes all of the Bitcoins out there in existence. And for example, if me and Jay would to transact with one another, the way the technology works is I'm transferring, for example, to Jay 1 Bitcoin, but the way he knows that I actually transferred him the Bitcoin is because I'm shouting in the network to everybody I'm connected to that I transferred the Bitcoin to Jay. And when Jay wants to know whether I transferred him the Bitcoin or not, he is not asking me, Yoni, did I move him the Bitcoin? He's actually asking all of the people around him, which are connected to the people around me, and he sees that everybody sees that I actually moved him the Bitcoin. So this is what's called basically rumor-based algorithms in computer sciences, and what this creates is a way for people to transact with one another without the need for a financial intermediary. So traditionally in financial services, if there are two participants who want to move digital goods, digital money from one place to another, they must have a third party which basically would initiate that payment. For most people, for example, this would be called a bank. So you'd have a bank, and if you want to move money from your bank to another person, you'll have to move it from your bank to his bank. So that's already two third parties. When you're talking about more complex financial services like stocks, commodities, etc., a lot of times this becomes 15 different intermediaries, especially if you're talking about global transactions. So initially, Bitcoin is really about this blockchain technology which disrupts the entire financial services industry with a new type of a decentralized technology. On the currency level, Bitcoin is the first decentralized currency, which means there is no Bitcoin company. It's basically code that has been written a while back by a mysterious name called Satoshi Nakamoto, which has written an algorithm that defines basically the algorithm, the protocol for Bitcoin. And since then, everybody who's using Bitcoin, whether it's by running wallets or mining, are basically using the same algorithm, which says that there's mining. Mining is the process of basically signing those blocks. So if before I explained that the block is basically the current situation of where all of the Bitcoins in the world are, moving from one block to another is done through a process called mining, which is a technology process I won't go into right now, but the concept is quite simple. Anyone who runs the mining software of Bitcoin, which are thousands upon thousands of miners from all around the world, today a lot of them are in China, basically one of them randomly, based on his computer power, signs that block, and then that block resonates within the entire blockchain network, and that also creates the new bitcoins, which in total will come up to 21 million bitcoins. So which means there's a limited amount of bitcoins, 21 million bitcoins, which will ever be created, which means this is a scarce commodity, similar to potentially oil or gold. There's a limit to the amount of bitcoins that will ever be manufactured by the original algorithm. Now, the technology itself is a completely open technology. It's all based on APIs and technology, and once it started a while back in 2011, there are now exchanges trading bitcoins from all around the world. An interesting fact that I'm talking to a lot of people is the fact that it's probably the most traded instrument against a lot of different currency pairs around the world. So if you think about, for example, the Israeli shekel versus the Polish currency, it's extremely hard, if not impossible, to trade those very relatively exotic pairs with one another. But you can buy with shekel bitcoins, you can transact in Israel shekel to Bitcoin, you can transact in Poland the zloty to Bitcoin, in the UK pound to Bitcoin. So almost every country now in the world has an exchange that's exchanging the local currency into Bitcoins. The only other currency that has that level of wide distribution almost in the world is actually the dollar. So that's what's really interesting about Bitcoin, and that's why some people, more from the technology point of view, consider the technology of Bitcoin as disruptive as TCP/IP. So when I went into computer programming in the 90s, this was the beginning of the internet. In the core of everything we use in the internet, there is a technology called TCP/IP, on top of which all of the internet traffic, whether it's emails, our website browsing, our mobile browsing, everything is based on, and everything started from that invention of the TCP/IP protocol. So people are saying that Bitcoin is for money what TCP/IP was for the internet. Now, that probably explains what Bitcoin is for computer geeks. For people coming from finance, people are calling Bitcoin digital gold. So gold, when you look at the history of the world, is basically one of those rare commodities that got accepted as something that could be exchanged into money almost in every country in the world a while back, even before the agreements in the US to detach the dollar in the 70s from gold. And now basically we're seeing Bitcoin becoming something as interesting as gold on the internet, because people are actually looking at Bitcoin, and Bitcoin is being quoted in probably all of the different currencies all around the world. So that's what Bitcoin means to me. Now, the question around Bitcoin price, and we have a lot of different people asking us about Bitcoin price, so this is the time to say that this discussion is not a direct investment advice, but an open discussion about this new technology and new currency. And Bitcoin is being driven by supply and demand. So just like any other commodity, it's being exchanged in exchanges all around the world. People are speculating on the price of Bitcoin. There are a lot of Bitcoin enthusiasts who are hoarding Bitcoins. I have a couple of friends who actually bought early on thousands of Bitcoins. Very lucky people now when Bitcoin is at $1,000, and they believe in the technology, so they're really hoarding it and keeping it. I don't know if for old age, but at least keeping it for now. And there's a limited number of Bitcoins being basically mined or created every day. Now, what's really driving Bitcoin price a lot of times is Bitcoin acceptance in the mainstream. So the majority of people that I talk to, and we're quite involved in the Bitcoin community, are always long Bitcoin, but from obviously the $117 trillion of assets under management in the world, only less than $15 billion are now invested in Bitcoin. And when you talk to investment management firms, investment managers, big banks, they're still shining away from actually buying Bitcoin either for themselves or for their clients. It's still really not a mainstream financial asset such as gold, ETFs, money markets, etc. So what's really driving the prices up and down is when the price goes up because of some external event in the market, suddenly a lot of people are looking again or interested in Bitcoin. Something, by the way, we're monitoring here in eToro is Google Trends and how people are searching for the term Bitcoin over the internet, and there's almost a direct correlation between the price of Bitcoin and the number of searches of people looking into Bitcoin. And whenever more and more people are talking about Bitcoin, we also see volumes of clients coming into eToro to buy Bitcoin, which obviously leads us to buy real Bitcoins in the exchanges, which is then driving the market up. So this is very similar to every scarce commodity speculative market. Basically, markets are being defined by demand and supply, where here the majority of demand is speculation around Bitcoin prices. The main difference is there is no real potential drawdown into Bitcoin. So we could see prices of Bitcoin go up. A lot of the Bitcoin enthusiasts around the world are talking about Bitcoin reaching anywhere between $2,000 and $5,000 in 2017. A lot of very smart people I'm reading their blogs and are running very successful companies are talking about that. But it is worth saying that a technology glitch, which from a mathematical point of view or computer science's point of view, people are saying is improbable, but nothing is impossible, could obviously also run Bitcoin into zero. So this is, as an investment opportunity, a speculative investment opportunity, but on the long term, a lot of the Bitcoin enthusiasts believe this could actually go high to 2,000 and 5,000 in 2017. Now, there are technologies all around the world that are based on the Bitcoin blockchain. And people are talking about Bitcoin becoming a payment network basically to enable different countries all around the world to transfer Bitcoins from basically a currency from one country into Bitcoin, then using the blockchain technology, which is a distributed internet technology, to transfer those funds anywhere around the world at a very low cost. And then, for example, if it's people moving money from the Philippines, so it's translating Philippine currency into Bitcoin, sending those Bitcoins into the US, and then translating them in the US into dollars. And I've actually known a couple of people who moved around the world, and that's the way they moved money around the world, because when you come to a new country, whether it's the UK or the US, a lot of times it's actually hard to set up for yourself a new bank account without any credit score, but it actually is quite simple to find a place to exchange Bitcoins into the local currency. What we're seeing as well, not only in India, but in several other developing markets. So as we all know on eToro, the dollar has been strengthening quite a bit in 2016 against a lot of emerging market currencies and also developing country currencies. But some countries have seen a very turbulent currency, very volatile currencies in those countries. And a lot of people are actually turning into Bitcoin as a type of a new safe haven, which is digital. So if in the past, people who had money in the banks, maybe had investment managers as well, would buy gold, then for people in a lot of different countries around the world, actually buying gold isn't that efficient. because they don't necessarily even have banks. So India is a great example of that. I'm not sure whether a lot of our audience have heard, but they're actually circulating out the 500 rupee and the 1,000 rupee notes out of circulation to force people to basically use banking, because not a lot of the people in India are actually using banks. And what that did in India, it actually drove the prices of Bitcoin very high, because instead of people actually using their rupees to go and put them in the bank, people tried to exchange the rupees into Bitcoins, which they felt is actually a more efficient way to both store value and transfer value and preserve the value of Bitcoins, which led, by the way, to an interesting arbitrage where the prices of rupee versus Bitcoin were actually quoted, I think, at $1,100. Just recently in China, there has been capital controls which have been strengthening in China. So the Chinese government has started to look at all the various ways that people are basically converting illegally money from the Chinese yuan into other currencies, and because there is a quota of up to $50,000 per person in China per year. And since they've done that, we've also seen a surge both in Bitcoin volumes in China and also in the price again of Bitcoin. So actually the price of Bitcoin in the West, everybody compares Bitcoin usually into the dollar and say that the highest price of Bitcoin was 1160 a while back when just before Mt. Gox went bankrupt. In China, actually, the Bitcoin surged beyond that to 1,300. So if you look at the prices of Bitcoin, a very interesting signal on the price of Bitcoin is actually to look at the Bitcoin, Chinese and Indian Bitcoin exchanges and look at the price of Bitcoin there and then translate it into dollars and see whether the dollar value is higher. What we see here basically is both the distribution of Bitcoin and of course things like the Brexit and general uncertainty around the world is actually making more ground into Bitcoin. So wherever economies are becoming uncertain, people now are not only looking at the old safe havens of the dollar and the euro and the pound and obviously the gold, but the more, I'd say, early adapters of technology, geeks and finance geeks are also looking at Bitcoin. Just as an example, the week of the Brexit, we've also seen a surge in Bitcoin prices. So every time there's volatility or expected significant volatility in the markets, you should expect significant uprising in Bitcoin prices. And just like the VIX, when actually things are becoming calm, a lot of times we'll see then Bitcoin prices going down a bit. So as a good example of that, we've seen Bitcoin price rocketing to $1,100 just in the past 2 weeks, from actually ranging at 600, 700, and then at the last week we actually saw them stabling more on $900, so actually going down from their peaks last week. That's just a very quick overview, sort of technical analysis of the bubbles and busts of Bitcoin. Always a bit dangerous to go into Bitcoin while it's rushing up, because usually when it's rushing up, it's followed by a correction to the markets. But as you can see, the general trend is sort of it goes up very rapidly, then it goes down, then it starts calling back up again, then at some point it's rushing up very fast, then dropping like a stone very fast, then again scrolling up gradually. That's sort of what we're looking at Bitcoin in the past 2 years. And that's just a very quick overview of our experience with Bitcoin, Bitcoin as a technology, and Bitcoin as a speculative instrument. Back to you, Matthew.
Thanks, Yoni. That was a very comprehensive cover of Bitcoin. But why don't we bring Jay in? And Jay wrote a great blog post where he made some salient points about the rise in 2016. So, Jay, why don't you talk about some of the points that you made and take it away?
Well, I think a lot of what Yoni said about Bitcoin being more than just a commodity and more than just a currency is very important. It's probably the most forgotten about feature of Bitcoin at the moment. But you know, you have companies such as Microsoft. Only today, actually, the DTCC, which is a clearance company in America that covers most US trades, has announced that it is also working with blockchain technology to implement some stuff over there to store stuff online. IBM are massively invested into blockchain technology as well. So I think in the coming years, maybe not 2017, but perhaps 2018, we're going to start to see the emergence of what's known as smart contracts in Bitcoin, and I think that will be, you know, something that really will begin to, as Yoni said, disrupt the financial industry.
Okay, and just you made some points about Bitcoin and political events like Donald Trump. Do you want to elaborate on that?
Yeah, I think, again, as he said earlier, we've seen, especially, I'll start with the emerging markets and stuff in Bitcoin. So if you look to India, Indonesia, China, Venezuela, Colombia, Argentina, Brazil, any country that is currently undergoing hyperinflation or currency controls, or you know, one thing that Yoni didn't mention about India at the moment is, as well as taking back some of the currency from the citizens, they have also been taking gold away from citizens as well. So not only are people, you know, unable to store their money safely within their own currency, but even, you know, the de facto hedge against that, which is gold and silver, is now being threatened somewhat as well. Bitcoin is immune to that because of how it works in general. You know, in theory, it is possible for me to transfer money to you or to Yoni with Bitcoin without even saying anything, you know, or writing anything on the internet at all. I could write down something on a piece of paper and hand it to him, or send it in the post, and he could then use that to connect to my wallet online and have access to the coins and stuff. So it's also it's a borderless currency, and I think that we're going to see that start to disrupt some of the remittance companies and stuff around the world. On the subject of Brexit and Trump, obviously, as he said before, when you're looking at volatility coming into markets, and I think pretty much everyone knew that it was either going to be the pound or the euro that was going to go flying in one direction or the other, or even both. And there was even, you know, there's potential risk. A lot of economists called that there was a risk to the overall economy because of how connected everything is at the moment, with the results of Brexit or the results of the US elections and such. So obviously gold, exactly like Bitcoin, is where people will put their money, and I think Bitcoin increasingly is becoming a good option for that, as more places that are trustworthy, more exchanges are beginning to get a good reputation for, you know, staying solvent, basically.
Jay, I have a question to you. When I'm used to saying, when people ask me about Bitcoin, I tell them that because of the technology and because it's the first decentralized currency, I think if I look 10, 20 years ahead, I have a very good feeling that even if there's going to be a, you know, a Google coin or you know, a digital sterling, and eventually, obviously, the world after Bitcoin will never be the same, because post-Bitcoin, all of the central banks right now in the world are looking at digital currencies. What does it mean? How can you issue digital currencies? So I assume Bitcoin won't necessarily be the biggest digital currency in the next 10 and 20 years, because governments will eventually issue their own digital currencies. But in my opinion, because it's the first digital currency, I have a very good feeling that my kids, which are now 2-year-old, 4-year-old, and 6-year-old, 10 and 20 years from today, will still know what Bitcoin is. Even if it's a form of nostalgia, I have a good feeling that over the internet, it'll be remembered as something, and people will keep it. And even if 10, 20 years from now, that's all that it is, it's probably still worth the value that it is worth today. Because today, every prime minister, central banker, CEO of a financial services firm around the world, I'd say at 100%, already know what Bitcoin is, but a lot of them still don't own Bitcoin. And I think that's probably going to change in the next couple of years. What do you think about the adoption rate when you think about your friends? Like, how many of your friends, Jay, or parents, do they own Bitcoin? Are they investing in Bitcoin?
Yeah, I mean, so obviously I'm quite a techie guy, which is how I discovered Bitcoin so early. So a lot of my friends, I think almost all of my friends know what it is, probably because I don't shut up about it. But yeah, I mean, you know, my parents heard of it on the news after I've been talking about it for years. The first time they saw it on the news, they were sort of, you know, shouting at me and being like, "Oh, what's this? This is the thing you always talk about." I think it is starting to get out there. But actually, interestingly, with regard to your comment about central banks and governments distributing their own cryptocurrencies in the future, I think one of the very interesting things about Bitcoin and about this cryptocurrency movement in general is that I don't think Bitcoin is necessarily going to go anywhere. I think it might remain the largest cryptocurrency for a very long time, possibly longer than 20 years. Because the way I see it is that what effectively has happened is that you are now able to vote with your money on which system you want to support. And we've seen that with the current cryptocurrency market. There are over 700 different cryptocurrencies that exist now, and they all do totally different things. All of them stemmed from Bitcoin originally, and I'm sure that there will be, you know, a UK coin or whatever it's called that will be distributed by the government, and they'll be able to collect taxes through it and all the rest. But maybe some people don't want to pay taxes. Maybe they will keep their money inside Bitcoin. You know, and maybe there's a more anonymous currency that people might want to support. Maybe there's one that is greener and uses less resources for the mining algorithms and stuff. So I think we're definitely going to see it start to spread out, probably in around 10, maybe 15 years, into lots of different currencies, and I'm sure some of those will be government currencies. But I don't think that we're going to see the demise of the ones that have been started by the community, such as Bitcoin and Litecoin and Ethereum, for example.
So what are your thoughts about Ethereum, which is something we're actually adding very shortly on eToro?
Well, I own a bit of Ethereum. Obviously, Ethereum actually contributed to part of the drop very early in 2016 for Bitcoin because of a hack in
the DAO.
The DAO. It wasn't really a hack as such, more an exploit, which is now being fixed-ish. But yeah, I think Ethereum is definitely the most interesting for me at the moment. Dash is very similar to Ethereum. I'm quite interested to see how that performs as well. Both of them are basically focused on smart contracts. That is their goal. They want Bitcoin to become the currency that is the commodity, and they want Ethereum to become the one that you can sell your house on, or get married on, or, you know, set up a deed on and stuff. And I think that's another layer that we're going to see in, you know, 20 to 30 years in the cryptocurrency space, which is just going to absolutely revolutionize the planet, because there's going to be so many jobs that will be disrupted the same way that driving jobs are about to be disrupted by autonomous vehicles. I think that autonomous smart contracts and even autonomous companies are going to eventually begin to disrupt lawyers and bankers and everything else in that sort of
lawyers and accountants first.
Yes, yes.
Replaced by computer geeks and smart contracts.
Yeah, yeah.
Nice one, guys. Look, I mean, Jay, why don't you've had a very good year. Well, last year was a great year for yourself. Why don't you tell us a little bit about your strategy and your approach to trading Bitcoin?
So overall, I trade stocks, tech stocks specifically, as well as Bitcoin, especially surrounding things that actually affect Bitcoin quite a lot, such as graphics cards from NVIDIA and AMD and companies like that, which are working in the space quite a lot, IBM, etc. With Bitcoin specifically, I think my goal on eToro, because I have seen so many people on eToro who don't really have the same background in Bitcoin as me, is to try and help educate people, because I think understanding Bitcoin is very important. I think it's very empowering for people as well. But B, I think my goal is to try and offer some sort of a more protected investment for them. You know, because the problem is that as soon as you've heard about Bitcoin as the general public, that's probably the time not to buy it. The number of people who were screaming as we were approaching the new year that it's going to 1,000, it's going to 2,000, it's going to 5,000, you know, for New Year, and I was just like, is it? I don't know. It's suddenly gone parabolic, and I've seen this 3 times before. So I say that I also got caught slightly by the crash as well, but I think that's my goal with Bitcoin is to make sure that I'm on board for the rides, but try to control the risk a little bit because it is very risky. I'm very excited, by the way, to hear that you're adding Ethereum soon. I'm sure the Bitcoin community will love that as well.
Nice. And I suppose one thing that I always think, and I'm sure other traders or people who look at Bitcoin, what holds me back is, can you trade Bitcoin like a normal instrument? Does it follow? Can you use the same sort of support and resistance levels? Does it move in the same way? I know Yoni touched on it earlier about it, being very speculative. But can you tell a little bit about, say, the technical analysis of Bitcoin?
So obviously Bitcoin has got, to understand the fundamentals of Bitcoin, you've really got to be a geek, basically. You have to understand the miners and all the different big players around the world and the political events that are going to affect Bitcoin. As far as technical is concerned, I think it is still very readable. I use tech analysis quite a lot, especially when I'm trading. Like for the last few weeks, I've been using it quite a lot, which is how I saw that crash coming. I think it does trade very similar to tech stocks, more so than currencies, because you can see such huge bubbles, and I think that's influenced by the technology side of Bitcoin. The fact that we could get an announcement from Google tomorrow saying that they've released some cool new product that works with blockchain would obviously boost Bitcoin hugely. Yeah, it's definitely complex. Obviously, it's traded 24/7 as well, which is very unlike most other instruments. Currencies, kind of commodities. But that's where it differs from tech stocks, I'd say.
Okay. And it's we're in the early stages of 2017. I know we've talked about where the price can go, but if I open it up to the both of you, what's going to cause Bitcoin to rise if it does in 2017, and will the political events coming up be involved?
I'll let Yoni answer first.
So first I'll describe sort of my strategy on trading Bitcoin, and anyone can actually go into my profile and look at my history trades in Bitcoin. So first of all, I'm generally bullish, Bitcoin bullish. So about 10% of my portfolio on eToro is on Bitcoin, and the majority of my total assets are on my eToro portfolio. Then I'm generally always long Bitcoin, and then I use take profits. So for example, I had a take profit at 1,000 and something, and then when it hit the take profit, I generated a significant profit on my Bitcoin trade which I think I bought at $250. And then what I really need is to make sure that I resist my urge to immediately go and buy Bitcoin at $1,100. So whenever my take profit hits, my immediate reaction is, oh no, I don't own enough Bitcoin now and I must buy more Bitcoins. And what I do then is I try to buy a smaller amount of Bitcoin that I had before. So if I usually have 10 to 15%, I'll buy with now 5 to 10% of my account Bitcoins, even when it's going up, just to make sure I'm still long Bitcoin. Then if the market fixes downtrend, I still made the profit on my older trade, and then basically I'll ramp up my position to where it was before. So I'm sort of expecting Bitcoin to rise up, hit my take profits, then for me to be unable to resist to buy Bitcoin at a higher price, to then the market go down, which is what happened now, for me to then buy a bit more Bitcoins where we are now. I really hope that it doesn't go any lower, but that's what all long traders hope for. Now, regarding 2017, I'm generally very optimistic. Again, the disclaimer of this is not an investment advice, but I'm generally very optimistic to the future of Bitcoin. So we talked a bit about its technology and what's happening around the world with different governments around the world. And I think what's really interesting is that its technology is considered unstoppable. So it's a pseudo-anonymous store of value and a payment network where governments, in theory, cannot stop people from owning Bitcoin. So when you own Bitcoin, it's not registered anywhere in any financial or regulated intermediary necessarily. You can still transfer it and exchange it, which means it's sort of beyond the scope of governments or beyond the reach for people. So I think I'm optimistic we'll see the price of Bitcoin hitting at some point $2,000 in 2017, where probably the biggest risk of Bitcoin, while people owning Bitcoin or moving Bitcoin are beyond the reach of governments, companies, local companies are not. So one of the main reasons we saw the drop in Bitcoin from 1100 to 900 last week was because the Chinese regulator invited 3 of the largest exchanges in China, which are Huobi, OpenCoin, and BTC China, and actually published a sort of a letter to the public saying, we invited all of these exchanges and we're warning the public that there's no clear regulation around Bitcoin, and that Bitcoin is still not a currency and very speculative. So the regulator in China definitely can close the local exchanges, and if it closes the local exchanges, in theory it could significantly hurt the trading volumes of Bitcoin, bringing the prices down. Now, what we've seen in the Bitcoin community over the last couple of years, that every time an exchange falls, it drives the Bitcoin price down, but eventually is actually, to some extent, healthy for the long term of the Bitcoin industry. So even if a government would decide to close a local exchange, most chances are with today's technology, we'll suddenly see decentralized exchanges or foreign exchanges offering their services in that country, which is actually completely counterintuitive to what a government wants. So I think the risk for the price of Bitcoin in 2017 is governments thinking this is too much, this is becoming too significant either in trading volume or overseas transfers, and trying to stop it. In the long term, I think it'll actually create the opposite effect, because if we'll have governments trying to stop Bitcoin publicly, then actually realizing that they can't stop Bitcoin, it'll actually strengthen the Bitcoin price in the long term. So that's sort of my short-term 2017 view.
It's quite a lot to follow. So I think another thing that you didn't mention that's going to be important this year is the Bitcoin ETF submitted by the Winklevoss twins. So a lot of people don't know, but they bought around, I think it was 1 million Bitcoins, which is an awful lot of Bitcoins, back in 2013, 2012, somewhere around there. And they submitted to the Securities and Exchange Commission in America to create a Bitcoin ETF, and the judgment for that is now coming in March, which is actually the same time that Bitcoin is also upgrading to a newer version as well, which introduces a few small features. So I think in March is when we're going to probably start to see a big drive up, or possibly a small drop if the ETF is denied. Long term, yeah, I think that there is going to continue to be a struggle between governments and Bitcoin, as Yoni said. Russia, for example, has banned Bitcoin numerous times and been shutting down exchanges and stuff like that, but it hasn't really stopped Russian citizens from buying and selling Bitcoin. You know, it just kind of moves it underground. So I think 2017, my personal estimate is that we could see, if the ETF is successful, then I think we'll definitely see prices above 1,500, probably towards 2,000, maybe even 3,000. Potentially, if everything goes very, very smoothly this year, then I think, for example, if SegWit is initiated, which is segregated witness, which basically improves the number of transactions that Bitcoin can handle. At the moment, Bitcoin handles around $100,000 worth of transactions every minute. So in theory, if that gets approved and everything else goes well, then I think the price could go as high as maybe $7,000 or $8,000 during a bubble. So it would probably settle quite a way below that. But obviously, it's incredibly risky. So I personally never recommend to anyone to have more than 10% of their portfolio as Bitcoin quite yet. But definitely worth dipping a toe in for pretty much everyone, I would say.
Yeah, I agree also around the segregated witness. I think there's now developments. So one of the main things. Hello?
I can still hear you.
Yeah.
I'm still here.
So one of the main things that a lot of people in the Bitcoin community complained about last year, and unfortunately complained so loudly about that I sold about half of my Bitcoins back then. There was a big political discussion around Bitcoin about the block size. Now this is very techy, but since there is no owner of Bitcoin and it's decentralized, that means there's a group of programmers defining the future developments of Bitcoin. And there was a lot of discussions on how do we scale Bitcoin, because it reached its technology capacity limit. And when people think about, okay, can this be an infrastructure for millions of people doing all of their transactions over Bitcoin, the technical answer was no, not yet. The technology is still limited, and there were a lot of arguments within the Bitcoin community, which I believe was actually, those discussions and arguments kept Bitcoin price low around what will be the solution, to the point where actually people opened something called Bitcoin Classic, which is sort of a spin-off of Bitcoin, saying this is going to be the real Bitcoin. And then this new technology called segregated witness, and on top of that, something called the Lightning Network, suddenly created a potential sort of upgrade to Bitcoin to enable basically infinite amount of transactions on top of the Bitcoin blockchain, which basically means that if this gets implemented, and I think it's actually just a matter of time now, because you need 90% of the network to actually embed that new change. Once it's implemented, in theory, it makes the Bitcoin network scalable from the amount of transactions to infinity. which is something that a year ago people still asked whether it's possible, how it's possible, with a lot of arguments, what's the right way to do it. And then a year later, from a technology point of view, people are actually looking at it and saying, okay, it's just across the corridor, here it's coming.
Yeah, I don't know if you saw actually, but Litecoin recently announced that they're implementing it very, very, very soon. Personally, I'm not such a fan of Lightning. I do think that we do need to increase the block size for Bitcoin eventually, and it's actually a reason that I did one of my recent trades today and yesterday. I started to open a position in Western Digital because of the technology they're coming up with for hard drives, which means that we could see 500 terabyte hard drives within the next few years for really quite cheap. So that removes the space problem of the issue. At that point, it just comes down to internet connections. So I think overall, eventually, one way or the other, this problem is definitely going to get fixed. I think SegWit is undoubtedly a smart move. I think Lightning is probably a good move for the short term as well. But I'm not a fan of off-chain transactions, personally. I know this is really techy. A lot of other people maybe won't understand that, but basically, off-chain transaction is where you're kind of agreeing to move Bitcoins around without doing so via the actual Bitcoin network. So that was one of the solutions that was talked about back during the huge debates that we had throughout the last year on Bitcoin.
Okay, great. Last, guys, I think one thing that might be interesting is Bitcoin. Is it still a currency, or will it continue to be a currency, or is it largely going to become an investment? Ian Cresswell makes a good point about the ending of supply, which was touched on earlier. So how will that affect it? Will it remain a currency?
So my opinion of this is that in theory, if enough people begin to adopt it, it kind of has to become a currency because of the fact that it's deflationary, and all of the currencies, all of the mainstream currencies right now are inflationary. So, if I have £20 if I have £100 in my bank account and then Brexit happens again, then I lose, £20 because it drops 20%. Whereas Bitcoin is eventually going to be going the other way, just due to population growth, if nothing else. It won't hit its cap for a long time. At the moment, the inflation rate is around 4%, but already you can see in countries like Venezuela and Colombia, people turning towards it. With regards to how viable it is as a currency, I think there will be other cryptocurrencies that are better suited for it, and Bitcoin will be almost like your savings account, and you'll have a different cryptocurrency that's your day-to-day transactions. Or there could be other cryptocurrencies that are run off the Bitcoin blockchain that work in different ways. There's I think there's so much of an open-ended answer to how it evolves over time. But for the moment, I think it's primarily traded right now as a commodity and as a tech stock. Looking forward to see what happens in the future. But I've bought things with Bitcoin. I've bought T-shirts. I've bought computer components and stuff. So it does work as a currency, but I don't think it's quite there yet.
Yanni, do you have anything to add, or
I think
top off on that?
generally it's very, again, the most similar thing Bitcoin is probably to gold. I don't think necessarily Bitcoin will be used as the currency itself, but more as the rails to drive different currencies. So I think what we will see in the next 2-3 years are actual euro coins, dollar coins, pound coins, UN coins. We are going to see fiat currency pegged on top of the Bitcoin blockchain and on top of other blockchain technologies. And they'll use the Bitcoin technology to transfer value over the internet. But I think we'll see sort of people, so the beautiful thing about Bitcoin is you can actually exchange Bitcoin into dollars within milliseconds, and then from, again, to dollar coins, right, to virtual dollars that are pegged into dollars on top of blockchain. Then transferring from dollar coins into euro coins, then to euro coins, back to bitcoins, etc. So I think what we'll see is Bitcoin becoming rails of currency exchange and transfer over the internet, which makes it basically powerful as what gold was probably in the past 500 years. So think about 500 years ago, people minted coins with gold and silver, and then gradually things shifted there, but that's actually more than 1,000 years now, or almost 1,000 years now. So this is very similar to how gold was used to mint coins. Bitcoin is going to be a technology rails to sort of mint or transfer value over the internet, which is something a bit different than being a currency itself. It's being the driver. Like, you wouldn't call gold a currency, but at some point in time, coins were made out of gold and silver, etc. So it's something a bit different, but I do think we will definitely see adoption of Bitcoin as a technology, and on top of that, transfer, currency exchange, etc., and other blockchains like Ethereum powering that as well.
Excellent. Okay, I'm just going to ask one last question from the community, from Suhail, who just touched upon the money laundering and maybe the criminal aspect of it. Very briefly, Yoni, do you want to add anything to that or answer that one?
Sure. So first of all, very important to note, eToro is a regulated financial services company both in Europe and in the UK. And obviously we're very familiar and practice anti-money laundering and KYC, which is why also at eToro we offer people to invest in Bitcoins, but not deposit and withdraw yet in Bitcoins, which is much more complex. So I think the reason there's a challenge, and by the way, this is something that definitely prevents the price of Bitcoin to spike higher, is that Bitcoins are pseudo-anonymous and are actually a very efficient way for people to transfer value, as we mentioned before, outside the reach of governments, which opens it to potential people to do either something beyond like currency controls, which you can consider as anti-money laundering or illegal transfer, or even criminal activity. But it's worth noting that it's pseudo-anonymous. So there's a very famous story, a company called Silk Road in the US, which was basically a really pure marketplace to drive everything. So sort of a libertarian vision of creating an eBay without any controls. Of course, when you create some stuff with no controls, people started using the Silk Road to actually buy and sell drugs, weapons, etc. in the United States, and at some point there was an FBI investigation into it. What's interesting is because Bitcoin is only pseudo-anonymous, that means, if you remember my discussion about technology, you can actually track every transaction on Bitcoin from the second it was mined or created and see exactly the entire trail it went through on the internet. So while it's called pseudo-anonymous, if you're a very smart government agency like the NSA or the Mossad, you would have analysis that actually matches IP addresses, and that means people's internet connectivity, into Bitcoin transactions, and you can actually have a very good map of the money flow around the world in a digital form. So generally, I think actually this type of technology called blockchain actually will help significantly improve anti-money laundering and the ability to prevent criminal activity. So the invention itself will eventually create the ability for regulators and governments to simply say, we want to keep track of people's activity on top of the blockchain. So from that point of view, while today there are some gaps, I think regulators all around the world, both regulators, central banks, and lawmakers, understand that the real potential of digital currencies is not to create a market for criminal activity or money laundering, but exactly the opposite. This is the technology which will enable eventually the prevention of black markets, money laundering, etc.
If I could just comment on that quickly as well. So I think the balance that's in Bitcoin right now of how anonymous it is almost spot on. For me to find out how much money Yoni has and in his Bitcoin wallets and what he spent it on and where he sent it is very, very difficult, especially if I don't know him or if I have never transacted with him or anything before. But for a government agency or someone with a lot of funding or sheer, brute force determination, it is possible to find out absolutely everything on where money is going. You just need enough people, enough time, enough, motivation to do so. And we actually saw this quite a few times in the early days of Bitcoin when Mt. Gox went down and stuff, and people were following the money around and seeing where it was going and how it was being split up and what was happening with it. So I think, I don't think you're ever going to entirely stop criminals using cryptocurrencies, but I don't think it's probably going to end up being Bitcoin. I think they're probably going to move on to other coins that are better suited for that purpose. But yeah, I think realistically 99% of Bitcoin traffic is nothing to do with crime. And I think it's probably going to stay that way at the moment.
Matthew, can I just give a ending note? Matthew? Yeah. So I just want to say, Jay, this is actually my first webinar with a popular investor. And just on that note, this is really, for me, very exciting because I think it's really cool. First of all, you're awesome. You're very sharp on Bitcoin technology. And it's fun to find you as a popular investor on eToro, as the founder of eToro. And hopefully this is one of many discussions we'll have in the future. I see we still have some differences on the technology of Bitcoin. We'll take that offline. But that was really the idea of building eToro as a social network to enable people like us to connect and communicate around the markets and the assets on eToro. So thank you very much for joining here the webinar and for being a great customer and popular investor on eToro. And I have a good feeling we'll probably meet face-to-face soon.
That'd be great. That's a very, very nice endorsement, so thanks for that.
Gentlemen, thank you very much. The content there was superb, so I'm sure the community loved it. And thanks everyone for joining. If you are interested in what Jay had to say, you can check out his profile on the Editor's Choice and the People Discover page. In addition, if you wish to trade Bitcoin, go to our markets page or type in BTC in the eToro search bar. If you wish to further discuss this call in greater depth, please contact your personal account manager. And looking forward to seeing you at next week's conference call with popular investor Demetrius 1. Demetrius has beaten the S&P 500 benchmark the last 4 years in a row, and that call is at 5:30 p.m. GMT on Tuesday, January 17th. Have a great evening, everyone.
Thank you very much.
See ya.